All right, I'm here with Zach Strickland. Zach, good morning.
Good morning, Andrew Cox. So our tender rejection index, I've got the last couple of years pulled up here just to show, a little perspective, where we've been, where we're going. We're still underneath 2020 in terms of an overall tender rejection index. So that's going to be important here in just a minute for something I'm going to show you. But I drew these lines. These are linear regression lines based on the starting point back there in March and sort of the trajectory of where we ended right here and where we're ending right here, just to show that we've actually changed course a little bit. So back a few weeks ago, I was talking about how we've got this nice, pretty line that comes all the way down, and it looks like it's going to end up about 16.6%. Over the last month or so, the tender rejection index is now starting to push things back up, and it's not just like one of these holiday surges. It's actually like a trend changer.
Sustained. Yep.
Yeah, it's a sustainable increase in tender rejection rates. And so now it's pulling things up to about a 17.5% trajectory, which doesn't seem like a lot, but we know that it's probably going to end way higher than that. So the bottom is changing and the trajectory is changing. So it's just something to keep in mind that if anybody thinks, okay, things are going to get back to normal. I don't know who's thinking that at this point,
yeah.
but if you are thinking that things are going to start to stabilize and settle down, kind of like what we were all thinking back there in January and February, which it was doing, it's just there's still so much pent-up resistance here. It looks like things are probably going to push up a little bit higher, and we've got this peak season that's just looming. A lot of demand still yet to be moved in the country.
Yeah, a lot of demand, and we still have a very sensitive capacity market here,
Yes.
right? Where one little event, whether it be a hurricane or it be a blockage on the rails, any kind of thing that takes capacity off the market can have a long lasting impact.
Exactly. So let's look at our OTBI real quick here. So something I wanted to, remember that tender rejection rate was higher last year. That's important to know in what I'm about to say here. So the seasonality of the outbound tender volume index last year here in orange, and of course 2017-18 might as well have never happened because they're so far below these two years. Right here, we're dipping below last year. And you'd think, okay, things are starting to ease up a little bit. Well, that tender rejection rate that I just showed you, that's included in this. So we're slightly lower on rejection rates. We're actually almost on par with where we were last year in terms of accepted volume. So overall freight moving through the country right now, right about where we were this time last year. Nothing has changed in terms of overall demand. So that's going to maintain a lot of pressure moving forward. And I think throughout the rest of the quarter, honestly, and obviously the rest of the year, this is going to make sure that rejection rate keeps a lot of pressure on it. And, there's just no sign of slowing. But I think one of the bigger takeaways here is that we can't seem to break through, any other boundary. So this could be potentially as much freight as we can handle in the United States.
It does seem to be we're hitting a ceiling. We've hit this 16,000 point ceiling many times. We pushed past it in that kind of crazy surge prior to Black Friday last year, but a lot of that was rejected freight. The tender rejection was at 30% at that point.
Yeah, you look at it. We're so, there's been little dips and undulations, but this is almost like a dead line of overall demand in the United States, and this includes a lot higher rejection rate. Keep in mind, this was like a 28% rejection rate right around this period of time as well. So a lot of rejected tenders here. We're moving a little bit more freight on the contracted market. So let's look at the map, the weighted rejection index map, see where in the country things have changed. We talked about the South yesterday. That has now turned into a lighter shade. Atlanta is no longer dark blue. Houston's no longer dark blue. So we're kind of moving out of here, but the attention's starting to get focused up here in the Northeast. So we've got the Allentown market, Toledo hidden behind Columbus there in the light blue. A lot of these markets up here, we're going to be watching this area for the rest of the year, mainly because that's where all the people are. So all this short haul freight volume, this Northeastern volume that all these carriers reject going into because they don't like to get going into the Northeast, that's where the action is largely central, positioned right now.
Right. Yeah, consumption's up there, not a lot of freight coming out. We've got carriers that are probably prioritizing the West Coast or prioritizing East Coast ports, but you're going to have to go up there to the Northeast, no?
Exactly. Let's look at the chart of Allentown and Toledo. Tender rejection rates, and you can see here, and of course, Allentown is the home of the famous Mahoopany, Pennsylvania area with all the toilet paper and Pampers. And, it's among other DCs. There's a ton of DCs up there. You can see here, huge rejection rate increase over the course of August. This isn't just a Labor Day jump or spike. This has been ongoing since the beginning of the month. Toledo, something similar, not quite as smooth, but a pretty big jump here over the last few days, pulling us all the way back to where we were in March for Toledo. So 21.4%, a little below the national average, still extremely tight market, but things have changed. If you're a carrier out there operating, spot market activity increasing in both these places, this one probably has a lot at this point compared to where it was just a month ago.
All right, look forward to diving into a few more markets with Zach Strickland a little bit later in the show.